Hello everybody, it's the weekend. I'm gonna make a video that's probably not gonna get a lot of views, but I really wanna make this video anyways for the people that are not understanding what's going on right now. You have a bank called SVB, which stands for Silicon Valley Bank. You're gonna hear a lot of hysteria in the news. You're gonna have a lot of hysteria from the YouTubers. Let me try to break down what's happening. This bank has been around for decades, a well-respected bank. This is a bank that you would not use, a bank that's used for startup companies, tech startup companies. There's a company that's profitable, and then there's companies that are pre-profitability. The company pre-profitable are all your startups. Think Uber, Airbnb, things like that. And there's like a lot of these companies. And a lot of these companies cannot bank with normal banks because they need funding. They need to borrow money a lot of times. And there's not too many banks that are gonna, risk analyze those companies. Silicon Valley Bank was one of the banks that actually specialized in this niche. And they're like, listen, we're gonna specifically deal with these type of clients. And all these clients, when they raise their Series A, B, C, D, all of their funding, they deposit all this money to Silicon Valley Bank. And as I said, Silicon Valley Bank has been around for 40 years. Now, I don't understand the exact threshold for Silicon Valley Bank, but in general, depending on which bank you are, they raise the threshold to like 12%. 12% is fractional reserve banking, which means that if the total amount of deposits that a bank has, let's say, is $1 million, they need to have 12% of the $1 million on hand. That's it. And the rest of the money they can invest. How do they invest their money? They can give out loans for interest, but a lot of these banks, what they end up doing is they give their money back to the Federal Reserve. They give their money back to the United States. How do they do that? They give them cash, and in return, they get treasury bonds. At the time of all of these deposits, this started happening in around 2021. Why? Coronavirus. End of 2020, early 2021. Boom, 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 boom. Everybody's doing good. Free money in the economy. Everybody's getting crazy IPOs, initial public offerings. People are going to market, to the stock market, and tons of other companies. Not just stock market companies, but also crypto companies, real estate companies, all startups. Any type of startup you can possibly think of is getting funding because money is so freaking cheap. Venture capitalists, right? Those are people that are investing into your company, are borrowing money at nearly a 0% rate, okay? They're taking their money at a 0% rate and they're investing in these venture capital and they're investing in these startups. These startups then go to bank with Silicon Valley Bank. Silicon Valley Bank lends out the money that they're getting from the Fed. They're lending that money out to the venture capitalist firms and they're getting just a little bit more percentage on it. For example, a bank gives the money to the Federal Reserve. The Federal Reserve gives them a treasury bond. Let's say the treasury bond is paying 1%. They're then lending out the money that the Federal Reserve is giving them, and they're giving it to a venture capitalist firm. The venture capitalist firm is now paying, instead of 1%, 1.25%. So they're only really making 0.25%, the bank. The venture capitalist firm then takes this money, they put it into the startups take the money, and the startups go back to the bank and say, hey, can we bank with you? And the bank is gonna say yes. Also, the startup that's getting this Series A funding, B funding, C funding, so on and so forth, they would then say, hey, Silicon Valley Bank, and it's interchangeable, any bank, we need money. Can you lend us money? They're going to say, sure, we can lend you money. And it's a vicious circle. And everything's okay as long as they're under the threshold of the currency reserve fractional banking of approximately 12%. Guys, before we go any further, a lot of people have been asking me, hey, Adam, we really love your channel. We really want to show you support. Do you have a Patreon? I do not have a Patreon. However, I do have channel membership. Channel membership is $3 a month. You get a really cool logo next to your name so people know that you support Adam Bergman. And you get really cool emojis. So when we're doing a live, you have custom emojis that only channel members can use. I have a link down below. $3 a month. I also have a link to our Discord, which is 100% free. I appreciate any support you guys can give me, and this allows me to make these videos that most people are not going to watch. Now let's get back to your regularly scheduled program. The second that people are going to say, hey, I need money. So all these companies are getting free money from the government, right? Everything's so cheap. Everything's 0%. Venture capitalists have money. They're all borrowing. But now what's happening right now, as interest rates are going up, as the Federal Reserve is raising interest rates, people are not borrowing as much. Remember on this channel, I keep making these boring videos explaining to you, as the price of money is expensive to borrow money, people are borrowing less. As they're borrowing less trickle down into the entire economy. As there's less trickle down to the entire economy, and it's harder to get money, it is harder to spend the money, and this essentially brings down inflation. But how does it bring down inflation? It destroys the economy, i.e., a recession. Do you see how all of this is connected? So what happens is Silicon Valley Bank, they're getting a run on the bank. Decided on Wednesday. Over $40 billion was requested from clients. And essentially a client says, hey, Silver Valley Bank, you have my money. I need my money because I need to pay my workers. I need to pay my rent. I need to pay for this or that, right? Because companies are hurting. A lot of companies that you know of are hurting right now. So they need money. They need liquidity. So they come to the bank and say, hey, we have $100 million with you. We need 50 million of the 100 million because that 50 million is going to get us through this next year, this hard year. Silicon Valley Bank says, okay, here's your 50 million. The next one, 50 million. The next one, 50 million. But then the next one, they're like, we don't have the 50 million. You get what I'm saying? And when that happens, you have something called a run on the bank where everybody starts panicking and everybody starts saying, hey, we're running to the bank, we're taking our money out, and then all clients start doing that. Peter Thiel, you guys all know him from Palantir, co-founder of PayPal, so on and so forth. Literally his fund, he says, get our money the F out of Silicon Valley Bank. And he's not the only one. A lot of people are doing that. At the end of the day, Silicon Valley Bank has bonds. They have a huge portfolio of bonds. Remember, I was just talking about treasury bills, bonds, all the same thing. They're borrowing money. But the money they were getting, the interest they were getting was around 1.8, 1.9% on their entire bond portfolio, which was like 20-something billion. They had to sell their bond portfolio, and that put them in a deficit. The deficit was over $2 billion. And it's not just one piece of news, it's a bunch of pieces of news. And the more people hear that there's a deficit, the more people are running to the bank and saying, hey, can I please have my money? Can I please have my money? And the more the bank is running out of money. And the people that got their money out are essentially safe, but the people that have their money in are now kind of like, what the F do we do? When Silicon Valley sold their bonds, you got to understand something. The current rate for cheap money, treasury bond yields, is like 4 and 5%, depending if you're getting a 10-year treasury, a 6-month treasury, a 2-year treasury. Silicon Valley had their money at 1.9%. And this was considered high yield back in like 2021. Don't quote me on the exact numbers, guys. This is all approximations, but close to it. So now Silicon Valley is in a heap of shit, literally becoming absolutely worthless. So now Silicon Valley Bank has a really big problem. And literally within 48 hours, all trading was halted on Friday. Nobody knows what's going to happen on Monday. And essentially this bank has become worthless. And now there's a few options of what's going to happen. Are they going to be bailed out by the government, kind of what happened in 2008? Are they going to be bought up by another company? And what happens to FDIC? FDIC is a federal insurance for $250,000. However, almost all of the clients in Silicon Valley Bank had over $250,000. Now, the $250,000 threshold can be played around, and you can actually get closer to like $1 million. But still, most people in Silicon Valley Bank are not insured. And also, people need to understand how FDIC insurance works. It's not that the U.S. government is going to write you a check. The U.S. government says, hey, your money is safe and will be compensated the next time somebody buys Silicon Valley Bank. And now Silicon Valley Bank, all of their assets, their company, is being put on auction. Whoever buys them eventually is going to make you whole. That's how it works. It's not the government actually going to write you a check. People have this huge misconception. Not to mention, overwhelmingly, the amount of money in Silicon Valley Bank was over the threshold. So most people banking at this bank are not insured, which means an entire generation of startups are going to go belly up. And I don't mean startups that you know. There are so many, thousands and tens of thousands of startups around the world. And a lot of those startups are actually in Silicon Valley Bank. Hence the name Silicon Valley Bank. because these startups are all in Silicon Valley. Shout out to Palantir for getting the F out of Silicon Valley, by the way. Palantir has $2.6 billion reserves, no debt, and I don't think they have any exposure here or very little. However, Datadog and Snowflake, I hear, have some exposure to this, and by some, I have no idea what that means. Could mean a lot more. Also, shout out to the CEO of HIMS saying that we don't have exposure to this. However, USDC stablecoin, which is the second largest stablecoin, if you guys follow me on my crypto channel, worth $43 billion, just confirmed that they have a $3.3 billion exposure to Silicon Valley Bank. And all of a sudden, the stablecoin is depegging. Now, this was considered to be the most stable of stablecoins. Dollar for dollar, super accounted by Deloitte, a big four accounting firm. They had the money backed up. This just goes to show you nothing is safe. Now, this has nothing to do with cryptocurrency. This is literally what was happening to all of the Celsiuses and FTX and Voyagers. There's a bank run. Nobody's safe. If USDC fails, crypto is going to go to its knees. Coinbase actually just stopped the conversion of USD, like actual fiat, to USDC stablecoin until Monday, until the bank opens up. It's freaking scary. Very, very scary if you guys hold crypto. But if this doesn't kill crypto, crypto is going to survive forever. Very scary times. Not just for crypto, for everything. And I'm sorry for bringing this up, but I want to give you guys as much information as possible. The Federal Reserve has an unwinnable situation. As they raise interest rates, more of this situation is going to arise. And make no mistake about it, the biggest banks that you can possibly think of are in very similar situations. If you have a bank run on any bank, this is going to happen. Probably a lot of mid-tier and smaller banks are going to have bank runs. Is this going to be 2008? Honestly, nobody freaking knows. But it is a very, very, very scary situation. The Federal Reserve must keep raising interest rates because inflation is not getting under control. The Federal Reserve probably wanted to do 50 or 75 basis points in the next meeting, which is going to be on the 22nd. And now they're probably going to get stuck at 25 basis points because everyone's going to be blaming the Federal Reserve because they're raising interest rates. Money is becoming too expensive. Because money is becoming too expensive, venture capitalists are not investing. Because venture capitalists are not investing, these companies, startups, don't have money. Because these company startups don't have money, they have to go to the banks and they have to ask for liquidity. The more that they're going to go to the banks and ask for liquidity, if this is going to reach that threshold of 12% or whatever the number is for the specific banks, it varies depending on the size of the bank, you're going to have a Silicon Valley Bank situation. And this happens rapidly, literally overnight. Nobody in their right mind would think Silicon Valley Bank is going to fail. Nobody in their right mind. They were highly respected. 40 years in business, dealing with some of the biggest, baddest companies that you possibly know. I hope this little economics lesson explains everything that's going on right now. The economy is a world of shit. I know a lot of you guys follow my man Tom Nash and his doomsday, the economy. He's not wrong. And I've been saying it for quite a while too. Our economy is really in bad shape. The United States government as a whole would fail if people did a bank run. We owe more money as the United States than we make. Same thing like a bank, nothing different. The only thing is the United States economy is probably stronger than any other economy in the world because the entire world, wake up, owes more money than they bring in. The entire world, guys, world governments is living on credit, borrowed money. This is a fact. I'm not making this up. I'm not wearing a tin hat. This is economics 101. Check me. Fact check me. As a world, we owe more money than there is money in the world. We would fail. The United States government has military, and our military spending keeps going up, up, up. We're kind of those friendly bullies, you know? United States is that chummy person that you get close to in jail, and you become a friend. That's the United States. Our military is what ensures our imperialism, and our military is what ensures our economy. I'm not a hater. I'm not trying to make fun. I love America because I'm an American and it's good for me, good for my family. But very much so, the reason why America doesn't collapse is the United States military. And the United States military budget just went up by 3.5%. So if you were to invest in some type of stocks, maybe some military stocks will do you well. There are military ETFs. Of course, I'm invested in Palantir. There's also hardcore like hardware type military stocks, Lockheed and Martin, companies like this. I'm not advising you to buy anything or not. I'm just giving you guys some food for thought. Guys, we have an unprecedented situation. We're going to see what's going to happen on Monday. This is absolutely scary. Hold on tight and stop spending money. If you could save money, try to save money because you don't know what's going to happen. The situation is truly dire out there. And remember, we lost over $50 billion of market cap for all banks, not just Silicon Valley Bank. All banks are dropping. Charles Schwab, JP Morgan, First Republican Bank, Bank of America, Citibank. I'm not saying that they're collapsing. I'm saying that the market cap, like the shares of their actual stock, went down because people are fearful. People are scared. I'll also tell you, probably the safest bets you have is Bank of America, Citibank, JP Morgan Chase. Those are probably your three best possible banks that you can bank with right now in the United States that might avoid a bank run. Because as people are getting out of Silicon Valley Bank, those three banks are getting a shit ton of deposits from that bank. And not just from that bank. I'm sure a lot of people are leaving from smaller banks to those three big banks. Guys, can I ask you a favor? Hit the little notification bell if you're still here. I know this video is only going to get like 50 views, but if you are an OG and you've been here for a while, click the notification bell. It really helps me out. Thank you very much and enjoy the rest of your weekend.